The broadcast is now starting. All attendees are in listen-only mode.
Low Eagles. How's everyone doing today? Things are shaping up on a couple of instruments I want to cover. First of all, I want to welcome all the new subscribers that took advantage of our New Year's promo. I look forward to meeting you and collaborating with you in the private chat after face. I do drop in there occasionally, kind of to root the team on, and when I'm right, I guess right in the markets to come in and say, I told you so, because I need validation every day. Anyway, how's everyone doing? Ziggy, William, how you doing? Venka, Velasi, everybody. Okay, so those of you that have followed me around for a while know I look for 3 drive formations. We have 2 here. I want to make a major point. The dollar and the euro look the same, only inverse. That there are many times I wait for the third, the one more shoe to drop. That would probably take it back to my weekly line. But there are many occasions, especially as short the market is of dollars right here, that 2 may be enough. I will maintain my discipline and be patient, but I just have a feeling that we might just go from here, at least to recover maybe back at 122, 150. Euro's kind of saying the same thing. You know, you have 1 here, you have 2. For me, the ideal is to have 3, maybe up towards 3.5 or so. But we could just pull back straight from here, you know, arithmetically, just eyeballing it, maybe back to 21, which was an area that Blake had an interest in being a buyer. That may happen before we get another rally. I don't think this is a top, but I was thinking a lot of people will have 24.5, 25, a lot of weekly, monthly trend lines on euro. Also, I would not be pressing the short side in yen either for similar reasons. There's pretty glaring divergence in the yen down here. So this setup with the 2 as well, maybe we get a 3, but it actually has a stronger pattern here. See, this RSI reading is 33. Okay, and we bottom. So this is a second divergence right here. This was the confirmed low. First divergence under 30, 26, and the one yesterday well above 30 compared to the Dixie, which had a very low RSI reading of 14, and down here we were still under 30. So even a stronger technical structure on the RSI and US dollar yen, so I'd be very careful fading that as well. Oil, I'm also still trying to be patient. I'm labeling this 1. Here's your first divergence, and even if we got a new high above 65 now, I don't think we'll take out this RSI peak. So sitting on my hands, waiting for one more shot up in crude to use crude strength to establish short positions for at least a correction. When I was younger, they had this thing called the February break, and, you know, about halfway through January. So I'm looking for a lot of these things to complete into month end, and then have some type of correction in a lot of markets that have been going up. Of course, crypto's a wild card. A lot of people are starting to correlate. I heard this for the first time. People correlating the break in crypto as to why the stock market went down. That was a great top pick by Steve Volge yesterday at the opening when the S&P's gapped higher, even a day trade. And you can also see ranges are expanding. So a little more volatility. We'll see if this is just going to be a failing rally or we get another high. These RSI readings, Steve pointed it out, Blake did, 89 readings on weeklies, monthlies. It's not an ideal top here, up here. You know, we had about an 80 reading up here. Of course, it is diverging. But if we had another blow off, another new high, This time the RSI would be in not rarefied air, but not be much above 70 if it gets above 70. So that's kind of the scenario that I'm looking for here. So nothing off the gun. I was thinking of the chicken way to play the dollar reaction might be to short euro pound, but you know, and this was probably a clue that the dollar is going to bounce. Euro pound struggled with euro going to new highs. That was telling me that, you know, in a pure bull market, usually you get euro pound leading the way, not lagging euro. But right here, it's neutral to me. Now I'm in Steve's camp. I saw this last week. I thought we'd get more. I thought perhaps we'd go to the top of the rising wedge up here. It never happened. To me, it looks like it's rolling over here. So I think this is, see how we barely took out this high while the euro made new highs by quite a bit. And so that's kind of a negative signal, a little bit longer term, that euro pound is acting heavy, even with a real weak dollar. So your preferred short's going to be the euro, not cable, especially for rolling over here and maybe heading back down towards the lower end of the range. Any questions on anything I've covered here today, guys? You don't have to agree with me. Just want to make sure you know where my head's at. A lot of twos out there, a lot of things that shouldn't be pressed anymore on the envelope. You know, you have a choice to trade it to. I'm willing to miss trades. A lot of people, you know, feel like they can't. So you could have a small piece on, but I think it's a better habit to be in, to be willing to miss trades and wait for the kind of setups that have worked for you in the past, than to say, well, you know, I'm not going to wait for a third drive. I've seen twos work. I'll just get on it. So I'll readjust my plan if these are the lows here. So everyone with me? Give me a Y if you're with me. You know, in the dollar, I am thinking there's a chance for it to be major once we do get a low. You can see these lines here. We're closing in on some weekly wedge lines here. So to me, and we're almost higher on the week. We're getting a little hammer here. So maybe that was enough for rally, and then maybe we get the third later on. But I don't think I'd be short the dollar. Remember, we talked about the euro when it was well under 120, and we were already talking about the Commitment of Traders report having record longs in the euro. And I made a point that, gosh, if it's a crowded trade in here, just think how crowded it'll be at 22. So I haven't seen the new COT figures, but I'm assuming that it's still crowded and possibly even more crowded. So a potential reversal day here in the euro. I don't think I'd be long the euro either, just in case the two works. So Blake, how are you doing this morning? Steve, how are you today?
Doing great, Dale. And
Good,
I really like the weekly dollar index chart that you pulled up. I was waiting for you to finish to speak there, and let me go ahead and you were also talking about like the key reversal day for the euro. You know, one of the things that I loved, well, especially last night, was the flush of U.S. dollars in Asian trade overnight, and that put the euro dollar in a brand new high, and then we reversed. Now, it's still early. I mean, it's very early. These candles don't close for another eight hours or whatever it is. It's going to be a while. But if the euro dollar closes near its lows of the day, that is a very key reversal. You know, shooting star. Could be a bearish engulfing. You know, I mean, we could end up engulfing a couple of days worth of data. It's a nice bearish setup for now. But I like the fact that the euro dollar hit new highs and then reverse. Now,
Yeah.
something else this is the daily sentiment index, and one of the things that this is from last night. A couple of things that you might notice that are standout that I highlighted here is the euro is at 81. Anything over an 80 is extremely optimistic. We had the pound at 88. Now the euro is obviously reversed way more than the pound is. The euro got jawboned lower by ECB members today. The dollar index was at 12. So anything below 20, you start really paying pretty close attention to. Got volatility at lows. You've got, the volatility was just at 10 for the last couple of days, but we're still very low. S&P's historically very high, NASDAQ's historically very high. So, the readings were telling us, hey, you got to be careful here. Now the euro has reversed, the pound hasn't. Well, I mean, the pound's down a few pips, but the pound did the same thing that the euro did. We hit fresh highs overnight, but we just haven't reversed aggressively because this has mostly been a euro move up to this point. But there are a lot of potentials out there. You've got the Aussie dollar that hit a 78% retracement, also hit a new high, hasn't reversed yet, but it's looking a little, if you're long, you're probably thinking, okay, I got to be very careful up here. The Kiwi dollar, we have a trend line that's coming up here that's I don't know, about 30 pips away. The dollar Swiss, nice little Gartley pattern here, nice reversal. This was highlighted last night on ForexAnalytix. The US dollar Canadian, we have the Bank of Canada today, which I'll talk about here in a moment. The US dollar Mexican peso hit a confluence of support here, this 78% and a 50% retracement and 78% retracement, two different time frames or two different extended moves, but we're here. The US dollar Norwegian krona is at a 78% retracement. The US dollar Swedish krona probably is at. I actually need to revisit this chart because we don't analyze it, so I don't check it all the time. So let me see here. We are probably about a 78% retracement. Matter of fact, I think it goes lower than that. Let me see. Right around that. So around the 78% retracement as well. Yes.
Good morning, mate.
Good morning.
Because I had fresh analysis on the USD SEK, I showed it yesterday on the chat room. If you see the move lower is also very nicely channeled. So we also hit almost channel support. So it was a nice confluence with the 78.6.
Like this.
Yes, correct.
Perfect. Thanks, Steve. So we found some support here, and again, this is like all the dollar pairs. And you look at the U.S. dollar, Japanese yen, which is we're ahead of the 618 retracement. We've broken the downtrend line. Now, if we just break 111, we could end up seeing some broad-based U.S. dollar strength. Now, you also have to think in terms of, wow, the euro just took out 122. You also have to think in terms of, risk appetite, risk aversion. We had a really key reversal day yesterday in equities. Now we're bouncing right now, but you can see how we had an outside day. Looked like a possible shooting star, but it's more of just an outside day. We're getting a recovery right now. I talked to, the equity traders that I stay really close in touch with. They went home short last night, so obviously the market's up in their face a little bit this morning, but they're like, they're not really worried about it because of the key reversal day that we saw in the S&P, which we haven't seen in a long time. So they're just kind of waiting for the open to see what happens here.
I was thinking about you during that S&P sell-off, and thinking about your preview of the week ahead. And it was interesting that when the S&P was selling off, the dollar weakened. So, the dollar weakened with the market going up, and it weakened during that sell-off. It gave it back today, but there sure was no, the VIX was up pretty good, about 5%, and there was no running for cover into the dollar yesterday anyway.
Yeah. But okay, hold on. I'm going to I'll comment on that. Merkel just pointed out, expects SPD to make responsible decisions on coalition. Key points of coalition paper cannot be renegotiated. That's why I hit the euro. Just these comments coming from Angela Merkel. So that's what's pushing us right into support. And by the way, this is 121.90. Now, let's talk about that, Dale, because that's a good question or a good comment. Because a few people were noting, hey, look, the stock market's selling off, the dollar's not, the dollar not firming, why is that? And I'm in the camp, because I've seen it happen in the past, that we have to be under some pretty heavy pressure in equities for the dollar to really start to firm. Last time we were in this situation, stocks started to sell off, and I'm kind of thinking it was I can't remember if it was it was it was the financial crisis, or it was the Greek European debt crisis. I can't remember which one it was, but I remember this very vividly, and this is why I'm paying very close attention to what happens right now. Is the stock market has to really scare people in order for the dollar to firm up as a risk aversion hedge. All right. So we have to see, I mean, in my opinion, it'd probably be at this point like 3 to 5% correction, and the market looks like it's going lower. And we're not in that situation right now. The S&P sold off what? We sold off 0.5% yesterday from, we barely went down, and we're already recovering. There's no reason to buy the dollar from a risk aversion standpoint. Now, should the market get a little concerned, and we start breaking lower in stocks, and we, let's say we trade down towards, like, I don't know, this is an hourly, so let's go over to like a 4 hour. Let's say we get down to like 26 and a quarter, 2,600. I think the market might start getting a little concerned, and you might start to see people, ditching assets and just buying dollars outright, which that can happen. It's not a unforeseen event, but that is something that I think we won't really catch that dynamic in the market unless we see a true scare in the market where people become really frightened that this correction could be more than just your little pullback in a very bullish market. Right now we're in a very bullish market, and yesterday's pullback was probably less than 1% off the highs. I mean, it was 1.3% off the highs. 1.3% off the highs. That's it. Nothing to really worry about. We start dropping 5% or so, then the market gets a little freaked out. So that's a good comment, Dale, and I'm glad you brought it up, because it's something that we discussed yesterday while we were in the chat room.
Yeah, so we need a lot more duress. Just one last point.
Yeah,
the Russell was a relative weakness of all the U.S. forces. It was down over 1%. So it took a long time for the Russell to get going, to finally make new highs, and it was a weak sister on the sell-off yesterday.
Yeah, it was, and it has been somewhat underperforming the rest of the equity markets, and that's maybe a little bit of an indicator that it's not a whole broad market move. But you look at, like,
package, Blake, really, that's why people have been piling into the Russell, is that the new tax package is supposed to benefit domestic businesses more than multinationals. And
it isn't. And I think there's going to be a lot of questions moving forward on how the tax package is really going to benefit the American. American corporations, right? Yeah. But we'll see. I mean, to see the relative underperformance of the Russell, that is a standout. It's something that we should pay attention to. Transports also. They were down pretty good yesterday, and where did my hold on really fast? Where did my Oh, there they are. I don't know why my transports, I was missing them there. The transports are up 5.8% for the year, but they reversed pretty hard yesterday. So it's something else that we need to, pay a little bit of attention to. I'd guessed as well. Okay, so, and I just lost, hold on, let me grab that. I'm gonna put that up there. I just want to make sure I'm seeing everything. Now let's talk really quick about the Bank of Canada, because the bank, well, first of all, let's talk about the price action in the dollar Canadian. Now, as the dollar has been getting walloped everywhere, I mean, across the board, one of the outperformers, actually I want to say one of the only outperformers has been the US dollar Canadian. And the dollar Canadian has failed to hit new trend lows as the euro has been climbing, the pound's been climbing, the Aussie, the Kiwi. You'll notice that on the dollar Canadian here, and obviously I've got a lot of lines and a lot of garbage that I can probably delete some of the stuff here. That's not what I want here. Sorry. Delete some of this stuff that's it's kind of messy. You can see all this junk here. One of the things in the in the Canadian that you'll see is that we have stalled at the 618 retracement of the move from the lows at 120 up to the highs around 129 and a quarter. That really key resistance. We stopped at the 618 at 123.80, 123.50, and we haven't hit new lows. Now, that's not to say that we won't hit new lows, but we're really, as if you can, here, let's just compare it to the euro. Well, let's compare it to the Aussie. Whoops, that's not what I want to do. Compare to the Aussie US dollar. Okay, now look at the difference between the two. All right. You notice how and these are both commodity currencies. That's why I pulled up the Aussie. Now, notice how the Aussie over the last, several weeks has broke out into a new high, and see how the dollar Canadian has not broken to a new low. So that's, very divergent price action between commodity currencies. Now, and the same thing could be said for the Kiwi. So if you put the Kiwi up, it would show you the exact same thing. If the dollar does, get a bounce, which it could, I think it's gonna make its way through the dollar Canadian. Now, today, the Bank of Canada is meeting. Everybody is expecting a hike. I'm expecting a hike. All right. But I think that a hike is going to be met with some skepticism from the Bank of Canada, meaning they're going to be a little bit more dovish. And the reason why is there's ongoing NAFTA negotiations. There's a lot of question marks on, what's going to happen with, the Canadian economy, especially if, we obviously here in the United States, we have a wild card in the office who he can change his tone and his rhetoric and his opinions and his basically playbook at any moment. So if you're a central bank and you're trying to, predict, the future of your economy and growth and inflation, and I mean, one of the biggest variables out there is if for Canada is going to be NAFTA. I mean, if President Trump throws a monkey wrench in the NAFTA negotiations, and let's say the U.S. bows out of NAFTA, that's going to hurt the Canadian economy tremendously. At least the initial shock. So
he has plenty of monkey wrenches.
He's got plenty of monkey wrenches, sure. But what he could actually he could actually throw a real big monkey wrench in the Canadian economy. And so the Bank of Canada, if they're going to raise rates, which based on Canadian data, they probably should, and they probably will. But they're going to cautiously do it, I think. And if they strike too much of a cautious tone, we could see the dollar Canadian bounce. Remember, it's already been the Canadian currency has already been underperforming. So if the Bank of Canada really comes out and is dovish, we could see the dollar Canadian push back towards this 126 and a quarter. That's the previous, here I should take this line and let's move it right there. We can actually put it right there, which is 126.50. But you can see there's a spike low of 126.25, which also would be your 50% retracement. I think that if we break above 125, you can see this trend line here, then a shot up towards 126 and change is quite likely. And that, I think, is the risk for the Canadian today. Now, obviously, if the Bank of Canada decides they do not want to hike rates right now, this dollar Canadian is probably going to 126 and maybe even higher. I was just reading some tech stuff from I think it was Citi or Morgan or Commerce Bank. I can't remember this morning. They're like a 124 to 127 range. They see the Canadian in, which seems likely. I mean, especially if the Bank of Canada foregoes raising rates. Now, here's another thing to think about, just to throw a monkey wrench into everything. The Bank of Canada could also choose not to raise rates, and that could lift risk appetite a little bit. Because people would say, oh, the spigot is staying on, so stocks could stay bid. But remember, if the Bank of Canada chooses not to raise rates, it's not from an economy standpoint. It's more from a cautionary standpoint for NAFTA. So people will probably look past that. So if risk gets any type of, when I say risk, if stocks get any type of boost because the Bank of Canada decides they don't want to raise interest rates, and people go, oh, look, less liquidity or more liquidity, let's buy stocks, that it's not for the reasons you would think. It's more from a cautious standpoint ahead of the the NAFTA negotiations. And I think the market will read right through that. So just be careful for those of you that are trading equities in that type of situation. So anyway, just some food for thought on what's happening around the market. Obviously, I'm going to be, looking towards the Bank of Canada. I think this is going to be a real a big mover for today. I'm hoping for it. I'm hoping that we get some really good explosive price action in the Canadian today. Dale, are you there?
Great review.
Okay. Oh, good. Okay, I'm just making sure you're there. And with that being said, I'm probably going to pass it over to Steve. How you doing this morning, Steve?
Hey, Blake. I'm good, mate. How have you been?
Good. Everything's good. I'm just I got up this morning in a haze. I was in the middle of a
Dream.
some wicked dream, and I got up and stumbled out of bed, and I was like, man, where am I? Type of thing. So I'm just trying to get
I haven't had the nightmares really since I was, very, very, very young, like stupid nightmares, like, a dinosaur chasing you or whatever. But I can tell you one thing for sure, which I remember, it's completely irrelevant to the markets. The scariest in quotes I ever had was the following. I was seeing a dream that was very realistic, very real. I mean, it was, like scenes from my life. And, from when I was like 22 years old or whatever. So I wake up, and for a few seconds, I thought, that it's back then, I'm 22 years old, and I realized that I'm several years younger. So within a few seconds, I had to adapt to the reality that, what was seeming like a reality for a few seconds, I had to grow up like for a lot of years within 5 seconds. That was, the dream that I remember most than any.
That's a weird dream.
It is, because I honestly woke up believing I'm 22 years old. I honestly did.
I wish I could wake up at 22 years old again. That'd be great. Anyway.
Yeah, but if it held for 5 seconds.
Right. All right, Steve. Well, hey, I'm going to pass it over to you. Guys, good luck today.
Blake,
yes?
Before you go, because I'm pretty sure that you will want to see it as well, I have 2 charts to show that have to do with stocks. One of them is this. This is from Investors Intelligence Sentiment Data. We have the highest percentage of bulls since 1986, the smallest percentage of bears since the same year, and obviously the spread, since we have a record high and a record low, is also a record since then. I'm saying that for two reasons. First of all, we all know what happened in 1987, but second of all, the record was in 1986. So you get my point. First of all, it's another signal, in my opinion, that we're in the last phases of a mania, but that doesn't mean that we're going to find the top this week or the next one, right?
Right.
And then it's this one, which is also interesting. One of the reasons I was looking for a pullback yesterday, these are incidents in the market that we see positive correlation between the VIX and the SPX price action. So in essence, both of them moving higher. Okay, so VIX moving higher, SPX moving higher. And as you see in the vast majority of the cases illustrated here, that was a signal that some kind of a correction was beginning.
Oh,
Okay.
interesting.
Yeah. VIX did not make it too low with the market blowing off in the last several months.
Yeah, and yesterday at some point the correlation was almost perfectly positive. They were in tandem moving higher, which is extremely rare, as you see. I mean, if you see this chart, which goes back a long time, you'll see that the incidents have been a few only.
Then
Right.
this pop is a gift for a failing rally if yesterday was real. That's the way it looks to me. If
Yeah.
not, I think today is pretty important to see whether or not yesterday is validated or not.
Yeah,
I agree
which it doesn't mean it will, right? Because in this specific market environment, which, like it or not, we have a lot of an artificial bid. We are seeing movements that in markets of the past we wouldn't have been seeing. For example, it wouldn't surprise me if we push to new highs today, but I can almost say with certainty that if 15 years ago we had a run like the one we had, and we had an outside reversal day like the one we had yesterday, people would be selling a bounce. So in essence, you would, with quite high confidence, say that the market will at least move somewhat more to the downside, before even resuming higher. But in this kind of an environment that central banks are buying, we have algos, etc., you can never know for sure. That's unfortunately the case.
All right. Well, good luck today, Steve. Thank you. Great points with the stock market. I've got to get going.
Okay, bro.
All right.
Bye.
See you guys.
Good hunting, buddy. Okay.
Bye-bye.
How are you, Nostra Volgi? How are you, buddy?
I'm good. By the way, we have a lot of comments from Ed, who is Canadian, obviously. He says, because Blake was commenting about the USD CAD, he says, I'm Canadian. Canada is spending money like Venezuela. We're becoming a banana republic under the new prime minister. And, I already answered in text that, might be the case, but, USD CAD is, takes into account in the long term, theoretically speaking, the US economy versus the Canadian economy. Now, if we want to go to, the part of examining who spends what, we all know how the US debt is moving in almost a parabolic trajectory higher. And the projections of US deficits also don't appear to be good at all. So might be the case. I mean, you have boots on the ground, so you know better. I have no doubt that he's spending more than he should. That's not going to be first time we're going to be seeing this. But keep in mind that the US economy having to do with deficit and debt is not doing any better, right? So a second comment about that, I wouldn't take so much into account these kind of factors, because these kind of factors will inevitably influence an exchange rate, but that might happen, a lot down the road and not today or tomorrow. Macroeconomic factors, as such, might start playing a role, down the road and not today or tomorrow. He says Trudeau's government in Canada has his foot on the spending accelerator. Every time I turn around, he's taxing us more. We're becoming Venezuela. Ontario, Canada's largest province, has a debt per capita greater than Detroit and California. Still, my comment applies. I have no reason to doubt what you're saying. Absolutely no reason. But keep in mind that the US is not doing any better on that field, and this might take some time to manifest or to play a role in the exchange rate. Anyhow, let's have a look at, speaking of exchange rates, let's have a look at a few of the movements we've had. I don't have much to add about the stock markets. Yesterday, as I wrote in the chat room, and that's why being in the chat room is obviously a huge benefit, because we're here once per day for an hour, and then we have a half an hour interview. Yesterday, I took advantage of the plans that we had and closed half of my SPX shorts at market, so I made no profit on that. But I had to add twice to my initial position because I really believed in it, and I had to bend my rules because I believed that instead of taking a loss in this case, I can either reduce the loss I'm going to take by a lot or even make a profit. So I reduced my position to have the ability to add higher if needed at cost. So now I reduced my position.
Good money management, Steve.
Yeah, that's what I'm trying to do, because these markets are quite unpredictable. So I had gone to the point that I had in 1.5 times the position that I usually use, and I tuned that down to 2/3, so I can add higher if needed, because I do believe that even if we move higher today, I do believe that we should see around the corner a deeper correction than what we saw yesterday, because in essence, yesterday at some point we moved like more than 1% from the daily highs, but in essence we closed down yesterday like what, half a percentage from the previous day's close, not even, I think. So bottom line, yesterday's move was just a blip, in a bull market. I don't believe that this is a correction that can be enough for the market, let's say, to rally for another 10 consecutive days like we had. Keep in mind that I'm going to reiterate once again, I do see everything that you should expect to see at the last stages of a bull market, the mania and everything. But that means that you should be very, very careful, because timing reversals is, a fool's errand. You can see that in Bitcoin as well. I usually don't speak about cryptocurrencies, as you know, but I'm going to make a brief comment, two brief comments. Actually, first of all, you remember how easy it was to try to pick a top in this parabolic kind of chart, because, if you ignore the last part, even this back then was looking parabolic, right? Even this move back then was looking parabolic because it was something like that, right? So we had a lot of divergences. A lot of people were trying to pick a top. And as it always happens in a mania, you never know how far it can go. In this case, it went almost to 20,000. But we are obviously seeing at least a very healthy correction. Keep in mind that there is a double confluence here for Bitcoin at around 8,500. A equals C in this possible ABC correction. And the 78.6 from the move higher from there. Obviously, for now, it looks heavy, and it would make no surprise to me if we see more news about cracking it down, etc. If it even implodes completely. Personally, you remember me expressing my huge doubts about cryptocurrencies and their future, but in the everything bubble that we're in at the moment, if we found a low somewhere there and even move to new highs, it would really not surprise me. At some point, I do believe that the vast majority of the cryptocurrencies is going to completely disappear. But until then, you can't be sure when you find the top. And look at the Ethereum move. This is what we call up with the escalator down with the elevator. After breaking above this triangle, we were climbing like from 750 to double that, almost 1.4K. And within 3 trading days, we've gone from 1.4K to less than 900. So, anything below 665 is going to be, is going to trigger probably even more massive losses. So be careful if you're involved with cryptocurrencies. Bitcoin on the way down at least looks more, let's say, technically well behaved than Ethereum. So these are the two comments about that. And let's go back to our FX. First of all, Blake already mentioned the euro. For the time being, it seems plausible that we might have like an evening star formation building up there. Personally, I still believe that sell-offs in the euro are most likely buying opportunities. One area that can provide support is this area, the 120.80, 120.90 area, which produced the September high. We also found the resistance there for like 3 days, 3-4 days, at the beginning of the year. I think this area can act as support from this point on, but even if we drop lower from there, I really believe that unless we break below the 118.50 area, there is absolutely no reason to turn bearish. So I do believe that any news that bring on selling should be treated with caution as buying opportunities. I'm saying with caution because it doesn't mean that if we drop for a single day, you should be looking to buy the first day sell-off. But I mean that I find no reason that you should be actually looking for reversals instead of nice areas from which you can be buying the euro if you want to be involved with that. Perhaps due to the cross-currency effect, the euro-pound in this case, the pound, the cable remains, quite steady today. So far, it's unchanged on the day actually. Obviously, we might see some pullback there. 136.50. I think it's going to be a nice support area. 136 below it, so anywhere between 136 and 136.50. If I see, the market getting bid down there, I'm going to incline to believe that this is a true bid, and we might be resuming the move higher once again. Let's have a fast look at the metals. And by the way, if somebody wants us to see something specific, I know that we already have a question about the Euro Aussie since quite the beginning, and I'm going to have a look at both the Euro Aussie and the Euro Kiwi, Pound Aussie, Pound Kiwi as well, actually. Okay, let's do it now. So, Euro Aussie and Euro Kiwi. Okay, two things about it. First of all, Euro Aussie very nicely bounced from the 152 area. You can see the importance of the 152 area. It's the area that actually rejected price action during the summer before we moved lower in an ABC, a very clean corrective pattern like ABC. Then we moved, quite strongly higher. We used this level, as a pivot several times. Then we falsely break below it intraday. We bounce from there, but despite the very strong bounce we saw from there, keep in mind that we have no real confirmation yet that the move lower has finished, right? So in my opinion, this is not the place to be long or the place to be short. It will look attractive as a long opportunity if we see again a very nice bounce from like this little area here. So if we see a little bounce from here, right now, I think this should be good enough for at least one more move higher towards the 155.70 area, and we see from there. Also, if we do find some kind of a support here, I'm going to draw it so you can see it. There is also a nice potential for an inverted head and shoulders here, right? So, this is also a formation, we might see. But we shouldn't see prices go much lower from here, because if they do, most likely than not, then there is another leg lower. So, keep your eyes open, which levels are important, and you can take it from there. But as we speak right here, right now, I think there's nothing actionable yet. So I want to stress that out. Let's have a look at the Euro Kiwi. Euro Kiwi, quite a big candle today. Also a rejection from the previous triangle's support, this time acted as resistance. More or less same deal applies here. The bullish scenario is this. right? Another test of the channel and a rebound from there. The bearish scenario is obviously breaking below there. So you know the areas here as well. EuroCAD as always, more mixed and, in my opinion, not really tradable lately. I mean, it's very choppy for my taste, but I know that sometimes, actually, on occasion, quite often, people ask about it. So before I get a question about that, I want to cover it and say that, in my opinion, nothing has changed in the EuroCAD, meaning, I see better and more clear opportunities out there. I would avoid trading it at the moment until it becomes, more crystal clear in, what its intentions are. Let's have a look at the pound Aussie and pound Kiwi as well. Pound Aussie found a low here, obviously much better behaved. As you see, somebody can easily interpret this as a pennant. There we go. So obviously the pound crosses for the time being look, more constructive than the euro ones. So if we actually get, breakout from there, you can look higher once again. And the pound Kiwi. Pound Kiwi, as you see, getting rejected from a zone we had marked, as quite important. So found resistance today. Unless we break above this zone, be careful because we're near resistance. Buying near resistance, my opinion, doesn't make much sense. But obviously, if you see a little pullback and the move to penetrate this area, then it looks good. It looks good for another move, at least towards the 1194 resistance. So that's it with that as well. Now, having to do with the other thing I'm trying to catch a reversal on, the Aussie. Aussie overnight tagged to perfection the triple confluence that we had. The equality of this leg to this leg, the 78.6, and we also have channel resistance coming up, like almost there. So honestly, this is the do or die zone. If it actually pulls back from here, I'm game. I'm going to stay on it and look to make some profit in it instead of incurring a loss. Otherwise, I'm going to just bail out. But for the time being, I'm still a believer in the possibility. Now the Kiwi is posting a hammer today, but moved somewhat lower yesterday. The next level for Kiwi, I've said it is the 73.40. We also have a very nice ascending channel. I do believe it's overdone in the short term, but another leg higher is a possibility. And speaking of them, I want us to have a look at the Aussie Kiwi, because Dale, if you remember, I was talking about the possibility of the Aussie overperforming the Kiwi after we touched this area, because that was a very important support area. And as you see, that's exactly how it worked, because the cross-currency effect does play a big role. We did get a rebound from this area. This area is very important. As you see, it has been resistance and support several times in the past. The 200 EMA is also there. The question is, does that mean that we're now bullish? No, we're not, because to become bullish, we should see this descending trend line break to the upside at the very least. Okay, so only if we break above there. Otherwise, there is a potential of just a rejection once again from that area and another move towards the 1083, 1085 zone. Okay, so we did see overperformance for a few days, but today's candle doesn't look good. We got rejected from the 50 DMA. The descending trend line was a little bit higher. So let's see what happens from there. For the time being, I wouldn't turn bearish or bullish until we break either below 1083 or above this trend line. Breaking below 1083 is probably a very bearish event, because there is another way to see and interpret this, and it's this one. Right? big head and shoulders formation top. So breaking below here, not good news. And in this case, if that happens, you need to take it into account whenever you're trading crosses that involve the Aussie or the Kiwi. If we break below there, obviously, when you want to be short one of these currencies, you should be choosing to be short the Aussie. When you want to be long one of these currencies, you should be choosing to be long the Kiwi. Okay, that's why I'm showing this. Okay.
Let's look.
Yeah, EJ, let's see. We have a question about the euro yen. And, you know, something, let's have a look at the other yen crosses as well. Why not? We didn't do it yesterday. Euro yen, yeah, you know, not really much to say here, but I can tell you one thing for sure. For the time being, that does not look so bearish. I mean, this consolidation near the highs does not look so bearish. So, although the market, you can say, is undecided because we've already posted the 2 spinning tops in a row. We're seeing like a third one today. You know, unless we break below there, unless we break below 135, this has more chances of being a bullish consolidation than anything else. Oh, sorry, my mistake. Should open it here. Let's have a look at the pound yen. Pound yen, you know, we had this potential. It was a potential of an ascending wedge. I didn't really like it because I like wedges to be to not have so big of an angle between the two lines. But anyhow, we broke below it. We seem to be accelerating. Then we posted the morning star formation. Bottom line, the market remains confused. We're once again testing horizontal resistance here near 153. Personally, I believe that if we break above 153 again, we're likely going higher, right? And don't forget that the big picture is that we have broken above this huge triangle. We have remained above it, although we retested it twice. So I'm inclined to believe any bullish move that happens, right? Because we still have a series of higher lows. As long as we maintain a series of higher lows, this is the definition of an uptrend. So breaking above there, you know, which is quite a well-defined resistance area, I think that, you know, has a very, very increased likelihood of a push to new highs. Let's have a look at the Aussie and the Kiwi against the yen. Okay, both the Aussie against the yen and even more so the Kiwi against the yen, to me, they don't look like reversals yet. Actually, in the Kiwi yen, you can see it even more clearly. This looks like a triangle to me, which makes me believe that there might be one leg missing higher. It's not so clear on the Aussie yen, but in the Kiwi yen, for the time being, you know, this looks decently bullish. Only a break below 80 invalidates, a daily close below 80 invalidates that view. But even so, the 79.40 area then is very, very strong. You can see it here as well, very, very strong horizontal support resistance. So, you know, if we break below here, we can be looking for more downside. But as long as we're just consolidating here, you know, we're doing something like this, another move higher, statistically speaking, more likely. Aussie CAD and Kiwi CAD before the BOC. Yeah, by the way, I don't remember if Blake mentioned it explicitly. Keep in mind that we have the BOC's rate decision in 1 hour and 5 minutes from now. So obviously, you know, if you want to be involved with CAD, do that knowing that we have, huge event risk having to do with the Canadian dollar in, 65 minutes from now. Let's have a look at both of them. Aussie CAD. Here it is. As you see, Aussie CAD is moving nicely. We had pinpointed that descending wedge, and we had drawn that, when we were somewhere back here, that, it has the potential of pushing higher from there. It is pushing higher. It's obvious. We have broken above the wedge. But two things I want to comment on once again. First of all, keep in mind that this is a larger formation, right? So for us to actually turn outright bullish, for the longer term, we need to see more than that. Second comment, this, for the time being, can just prove to be like an ABC, right? So be careful here. You see this area. Oops. This area. And we're approaching it. So be careful here. Okay? Be careful. If we get a break above there, then, there will be a lot of space open for at least a retest of this trend line. But be careful because we might get rejected from there. So quite a critical area. Now, let's have a look at the Kiwi CAD. Okay, back then when we were seeing this, we warned of the potential of a rejection from this trend line. We got rejected initially, then we moved higher. Now we're back in this broken channel. Let's fib this and see what we have. Okay, we're a little bit above the 38.2. I would say that this area is quite important and quite interesting, right? So a push higher from here might find strong resistance in this area. So be careful. We should at least get some kind of a reaction, right? So 0.92, important resistance. We are currently, as we speak, on support. You can see it here. Let me draw it. There you go. We're currently retesting support there. And to be honest, if we zoom in the short term, this looks more like a bullish consolidation, like a pennant. Or a flag or a pennant. There you go. So this looks probably good for a break to the upside. Obviously, the BOC can change that, but from a technical perspective, it looks good for another push higher. And as I said, if we see that push higher, be careful. 92 area, 50% fib, also very, very strong supply-demand area. So, keep an eye for that. My pleasure, Michael. My pleasure. Okay, Dale, who do we have today?
We have Fabian LaBruce.
Okay, and what is he going to do to us?
People that 2 days in a row, people with French origins.
Okay, very nice. Viva la Revolution.
Okay, Fabian, you're on deck, buddy. Welcome to FACE. I'm going to make you the presenter. Thank you, Steve. Great analysis, as usual. And
my pleasure.
Everyone could catch Steve and Blake and Stell.
On the chat room, yeah. And
in the chat room for the BOC.
Yeah, and whoever hasn't tried ForexAnalytix, now that the New Year offer is done, you can take advantage of the $1 10-day trial, so you can have a look at it.
Yeah, there you go. Okay,
Bye-bye,
Fabian. Thank you, Steve. Waiting to hear your voice and see your screen.
Yes, I guess you hear me. And for my screen, can I publish my webcam?
You could use your webcam, and you can also show charts with a screen share.
Okay, so I guess
Completely up to you. Did you bring in any charts, or do you want to show your website, or do
I
you
will open charts. Yes.
just chat? Okay, very well.
Chart.
Okay, well, there
do
are
you
these
see?
charts. Yes, got it.
Okay, perfect.
Okay, so Fabian, comment allez-vous? I'm Elvis.
Ça va. Si on fait l'interview en français, ce sera mieux pour moi. But I
Okay,
guess if I speak French, no one will understand on the
yeah,
on
well,
your audience.
mine is very limited. I reached out to Fabian on Twitter. It was, I'm very much into content on videos, and that's your handle. What's your handle again, Fabian? It's Video Bourse FR.
Yes, it's videobourse.fr. It's a French website about trading and finance, which exists since 10 years. I began when I was 18. Now I'm 28. And yes, it's mainly a media in video. So it's a video that I do presently. I mean, I go to the companies like broker or platform. I go to the traders' offices and I do interview. And in the same time, me too, I trade. And since many years, I'm really passionate by finance and trading. But I'm also proud and happy to have this media because on the market for retail, for someone who work and who trade with his own money, it's hard to have a good way of income if we don't have another business with more regular resources. I don't know if I'm clear.
Yeah, you are. And it was a great segue as well. So 18, when I was 18, I was looking forward to going away to college and, having my own little space in a dormitory. I certainly wasn't thinking about the market. So why don't you take us back to when you started? Tell us a little bit about what influenced you, and are you self-taught, or were there people or mentors that played a role in your development as a trader?
I began because I knew that on the financial markets, you can develop your business and make money. So I wanted to do it. I've been at the university in administration and social and economics administration. So it was about economy and social. So finance are about it too. And also my father worked in a bank. So when I were young, I had some stocks. So I began to search some information about the stocks that I had. So this is my first steps in the financial markets. And yes, this is how I began.
Okay. So look, I think when you look at somebody's setup, that it tells you a lot about their style of trading. So first thing I noticed, is this a CAD courant that we're looking at? What's the instrument? What chart is that?
The chart that you see on the screen is the DAX, so the German.
Okay, the DAX, not the CAC. Okay. First off, I noticed you trade naked. I mean, you use candlesticks. I hope you have drapes or something, so when you're trading naked, no one could see what you're doing, and it's a joke. But the only indicator you have there is volume. So tell us what you're seeing in the DAX and why, and if you see anything that you're looking to exploit. DAX is not making new highs like the U.S. indexes did. What are you seeing on this chart here, and what do you use to tell you that it's worth compelling enough to assume risk to take a trade?
Okay, so yes, mainly I work on the DAX. I also like euro against dollar.
Okay.
So you said my graph is naked. It's because I removed the pivot point as it's a daily chart. It's not useful to have it. But when I go in 5 minutes chart, which is the time frame that I use for my day trading, I use the pivot points. It's not a main thing on my strategy, but it's still good levels, and many traders work with it. So it's still good to have those benchmark.
So it's a majority of your trading intraday?
Yes, and since many months, I can say few years now, I only trade during the period of movement. So opening of European markets, so 2 hours the morning, sometime opening of the US markets, but I don't really like it because I think it's more easy to work on the open of European markets.
Why do you think that is? Why do you think that is? The time of day or the character of the market?
The character of the markets. I think that when the European market open, you have a trend who appear, you can catch it, it continue, etc. When the US markets open, I think it go really fast in one way, then it stop, and sometimes really fast you go back down. So I think it's really not as easy to trade the opening of the US market in general than the European markets. And I also like the news period, because it's a period where you know that you will have moves on the market, and it's yet a good information, because when you don't know that when there is no reason for the markets to move, it still can move for some reasons. So when you know that it will move, in the worst case it will not move and you will not lose a lot of money. But if you think that the market will not move and you build a strategy, for example, scalping strategy with some leverage, and finally the markets move, it can give you bad results.
Okay, so looking at what you see here in DAX, you don't look long term. You don't carry things overnight. You like news trading. So, are some of your favorite days to trade like the U.S. NFP or any central bank activity? Are you like high impact events? Do you wait for the event, or do you take positions in front of the event?
I wait that the events and the statistics are published, and then I try to follow the trend that appear. I put a small stop loss, and if it go in my side, I catch the profit when it begin to go slowly, and that the trend give signs of end. And if I'm wrong, I stop it fast and I take the other side. So I stop and reverse my position. I can do it 1 time, 2 times, and sometimes 3 times. But in the worst case, I take 3 small stop loss. And yes, this is how I work on the news.
Okay, so you say that you like to trade Euro USD. Is that a day trading market for you as well, or do you have some longer term view? I mean, the euro had a great year, right? From 103 to 122 now. Are you in the camp for a continuation of strength in the euro, or are you starting to think that this euro rally might be getting a little long in the tooth?
I don't know, honestly, on the long term. I guess it can continue until 1.25, 1.26. I read the document from the banks. So, for example, here I have a research of BNP Paribas. So it's helped me to know what the big institutions think,
okay,
etc. But
I want to ask you something, Fabian. So you follow BNP Paribas because, you know, a lot of the banks A lot of people want to fade what they're saying. They usually come in, and a lot of their predictions are to get people to take the other side of the trade, so they might be bearish and they put out a bearish report, but they're really accumulating, or they might be bullish and they're looking for buyers to distribute positions to. Would you say BNP Paribas has a good track record of calling moves in the market?
I don't know. I didn't do a study about their results, but I know some people do. And in general, you see that the bank's analysis or previsions objective are not right. Me, I like especially BNP Paribas because I used to work in BNP Paribas, and I like what they. It's a big bank in France, and I guess now it's the biggest in Europe, or one of the biggest. This is for sure. They have good economists, so I don't really read it to have an objective. I just read it because it show me what the professional look, what they think. It's still good information. So after I can't answer to your question about their results and if they are in the right side. In general, just I like their research and I think it's good.
Okay. It's part of your intelligence gathering. Now, you and I believe after I heard your introduction, share something in common. You're on the other side of the mic as well. You host people and you do interviews of traders. Can you tell us a little bit about, I've learned a lot from certain guests that I've had, who some of the favorite people were that you've interviewed. If I'm correct, do you go out and you interview people in trading rooms and do videos of traders? Is that what you said at the beginning?
Yes, I do.
The video boards part of your business model is what again?
Yes, I do it. So I move to the place, mainly in France and sometime in other countries. I've been 2 weeks in New York in a trading room on Wall Street. It was interesting. And so I also do webinars and live on YouTube, on my YouTube channel. And video bourse, for me, it's it's all because you have trading, and as I said, I'm not. I think I'm not a really good traders. I just like trading, and I have with the years experience, so I have, I guess, good strategy and I have results. But even now, I couldn't live only with trading because from 1 month to another, there is big difference between my revenue and my profits or my losses. And I think that if you want, because it's the dream of many people to live only with trading, you need really a lot of money. But with video bourse, it's a good thing because in one end, it's a business that...
Is it a subscription service?
No, it's not. Everything is free for the audience, and my customers are the announcer, so the companies who want to address to touch my my audience. So for my audience, everything is free, and my customers mainly are brokers, trading platforms, or companies who have to sell things about trading.
I see. Okay.
Yes.
So it's the people.
And also, it's important because
they pay a fee to get the exposure to your audience.
Yes, and it's important to know this business also. As a trader, it's important to understand and to know the business of the brokers, the business around the markets, because there is, I guess you know, and I guess better than me because you have more experience, that there is a lot of ways to make money on the markets. And if you stay only on your main activity or only as a trader, maybe you will not understand or know what are the other possibility of the market, the other jobs around the financial markets, which can be good, we can be complementary, etc. So it's also a good part about video bourse for me.
Okay, so anything you want to wrap it with, Fabian? Like the most important lesson you've learned from either people that you've shot promotional material for, or in your own journey of trading for 10 years? What's your most important lesson that you've learned over that time frame? Is it leverage? Is it not using mental stops? Have you ever used a mental stop where you don't put the stop in, but you say mentally, I'll be out if it takes out a price level?
Yes, it's better to have daily loss limit fixed by your broker or by someone else. In the trading room, professional trading room that I visit, they have a department dedicated to the risk. And when a trader don't respect the limit, they cut their position or they call it by phone. And there is a hierarchy. When you are a retail trader and you have to do everything on your side, sometimes it can be hard to manage yourself, to limit yourself. So mental stop loss, it's good until the day you don't accept your loss and you don't respect your plan. So it's better to have a daily loss limit that you can't break.
100% agree. I make a joke, Fabian, that the last time I used a mental stop, my first stop was a mental institution. So yeah, I agree with you having that hard stop in there. Do you want to show your website and tell our audience the best way for them to follow your material or get to your YouTube page, or you want to put it up on screen? Now would be the time if you want to do that.
Okay, just I have to change because I guess you see only my
charts. We're
my
looking
chart.
at the Euro chart.
Alors, comment je fais pour changer ça?
Where in France are you?
Huh?
Where in France are you?
I'm close by Paris.
Okay.
And you? You are in San Francisco?
No, San Diego, closer to San Diego. So let me ask you this. Are you optimistic about the French economy under Macron?
Yes, for business is good. It's from, I guess now you see the screen?
Yes, yes.
Okay, this is my website. This is Video Bourse. And if you go on the main page, you have here the forum where people come to discuss. Everything is in French. So it's mostly for a French-speaking country.
So you don't have the translation English or anything on this?
No, you can do it with Google Translate, but no, mainly it's in French. Here it's you.
Okay, all right, all right. Nice. So you have
yes.
all your interviews there, and this is free content. And do all your guests speak French, or any of them speak English, or all your interviews in French?
Sometimes I do in English when I travel in other countries. It's the international language, so there is some content in English, not many, but maybe 5% of my videos are in English. And just to answer about Emmanuel Macron, yes, he's good for economy of France. He's a good businessman, and he's come from a Rothschild bank, so it's a banker, and it's not really well the business. So for the economy, I guess he will be, and he is yet a good president for France, and the business in France work good.
Okay, and it was a pleasure meeting you. Thank you so much, Fabian. I wish you a lot of success in your personal trading, and continued success with your website, and that your material, that you get millions of views on your website, in 2018, and very nice to meet you. Thank you for your time today and sharing a little bit about your journey and what you do at Video Bourse.
Thank you for your invitation, Dal, and I hope someday to interview you to know more about your experience and your background, because I know you have more than 30 years of trading behind you. So I guess you have many things to say. Thank you.
Don't rub it in that it's been that long, but I'd be happy to return the favor and do an interview with you. Just let me know. So thank you again, Fabian. Good hunting. Have a great 2018. Keep in touch. And like it or not, you're now my trading warrior brother.
Okay, thank you. And one question on Twitter, your account name is Stop Hunter. So Stop Hunter, it's a market maker way of think or something like that. Why you use this terminology?
Oh, okay. Well, because I believe there are things such as stop hunts, and I used to witness them during open outcry on the floor, and now I still believe they take place only by algos or high-frequency traders, and I wait for stop hunts to take place or try and trade into them because I believe the market is vicious enough, so it wants to eliminate as many people as possible from the move they're anticipating before it begins, then most likely without them.
Okay.
All right, buddy. So
Bye.
don't put your stops over swing highs, a pip over swing highs. Let me mentor you, make it be at least 40 pips above those highs so you don't get picked off and end up being right the market, wrong the trade. Okay?
Okay.
All right.
Good luck on the market.
Thank you, Fabian. Thank you, Face. We'll see everyone tomorrow. And let's see how the dollar pans out. We'll see if we get a third drive. Good hunting the rest of the day. Maybe I'll see everyone in our private chat for the BOC coming up shortly in about 8 minutes. If you're not a subscriber, you could always just try the trial to come in and look at our private chat room that goes on for multiple hours every day. And most of all, don't just count your pips, count your blessings. Good hunting, everyone. See you tomorrow. Thanks once again, Fabian, at Video Bourse France.
Yes, the videobourse.fr.
You got it.
I can share the link maybe on the chat. I don't know.
Yeah, go ahead. Before you go, just put it in the question section and it'll be there, and I'll share it. And you'll have this interview in a couple of hours. Okay?
Cool. I will share it. I'm sure it will interest you.
All right. See you later. Au revoir.
Au revoir. Hey, just for ForexAnalytix, is it your website or is it the website of several people that you share for do the interviews? Because I see that you have a lot of interviews.
Yeah, it's the best team on the net for FX. So you may as well let your audience know it's the best free room face on the net. We have some of the best analysts on the street here. Harmonics, Elliott Wave, conventional technical, candlesticks, and of course, interviews with people like you to edify the community. So, okay. Thank you very much, Fabian. So it was a commercial for both of us.
Yes.
Good hunting, buddy. See you later.
Bye.